He was a strong and friendly fella with the name of Campanella. He was someone special, I could see right off the bat. There was something.
Webcasting from the Little Bell Publishing Studios in Rockton, Illinois, this is the Mortgage Messenger with host Jim Campanella. Hi, I'm Jim Campanella and this is the Mortgage Messenger. Today is Wednesday, August 18th. Now, normally on Wednesdays, I spend time talking about programs or ways to help you qualify for a loan, or maybe building the right team, or working on building your credit. That's normally what we do on a Wednesday, is talk about something that's useful to you. Today, however, I'm in the mood for a little bit of an editorial. We're coming up on our 50th blog, which is sort of exciting. And yesterday, our industry changed dramatically. The Federal Reserve announced the final rules of the changes that are forthcoming due to the Financial Reform Act. They're coming in effect on April 1st, 2011. Originally, everyone thought it would take a little longer than April 1st, 2011. But it is what it is. It's now April 1st, 2011. And what the change, there's many changes, but one of the changes involves the way a loan officer, not the company, not the employer, but the loan officer is compensated. Previously, forever actually, well, all the way back at least into the 1987 range, loan officers, they're commissioned people, were paid based on the compensation, the profitability of a particular loan. Whether it be through points charged to the customer or paid by the lender or investor the loan was sold to, but they're compensated based on that. As of April 1st, loan officers are going to be paid based on the loan size, period. This is going to be a huge change for the industry. Some people are running around saying that this could be the end of mortgage brokers, that the mortgage commercial banks are going to be taking over mortgage lending, so on and so forth. I'm not sure it's going to go that far, but the reason I decided that today I want to spend time on the editorial is because this is just very weird to me that our government would decide to regulate individual people on how they're going to get compensated versus an employer or a corporation. I'm not sure there's any other industry out there where the employee is told by the government how they're going to be paid. Again, this is a huge change. You're going to see some ramifications with loan officers throughout the industry, throughout the country, finding other employment. It's going to be a different way. Some of us will certainly survive. Those of us that have been around forever, I've been doing this since 1985. That's really all I know how to do, so I'll have to ride with the tide and figure out how to make a living with these new rules. I want to relate this to, just so you understand the scope of how vastly weird this is to me. Toyota had a problem with their cars. Whether it was perceived or reality, they had a problem with their cars. We did not go after the salesmen at Toyota and tell them and go after them for the fact that they sold the cars. They went after Toyota. Since 2008, with the subprime meltdown and the crisis in the real estate industry, our government's been focusing on the loan officers. Certainly they're focusing in other areas too, but they've been focusing on the loan officers. Loan officers only sold the product that was given to them. We didn't create the product. We didn't create the subprime mess. We sold a product that was given to us to sell. Loan officers sold them. Certainly there were some loan officers that committed fraud and were unethical, and those people should be out of the industry and probably are by now. But the problem was the product, not the sales staff. And here our government is going after the sales staff, and it's just mind-boggling to me. I've been doing this since, again, 1985, that we're focusing on how a loan officer gets paid is going to cure our housing crisis. I'm certainly not suggesting that there didn't need to be reform in the housing industry. I'm sure there did. A lot of it's cured itself, though, as often it does. We don't have subprime loans. The government's also made it now, basically illegal to do a subprime loan, but they did it after we got rid of the subprime loans. We don't have no-income verified loans. None of our investors were buying them anymore, now that you can't do a no-income verified loan. So the government is coming up with regulations that are probably needed, but they're coming up with them after the fact. We have cured a lot of the problems on our own. We've self-regulated the industry. Since 2008, since regulation's been coming forth, closing costs for you to close your loan came out yesterday. Closing costs for you to close your loan is up 37% from prior to 2008. And the bulk of the reason for that is because of the regulation. The change in forms, it costs more. The change with HVCC and the way appraisals are done costs more. Everything's costing more because of these new regulations. So the government's trying to protect the consumer, and I applaud them for trying to protect the consumer, but by them trying to protect the consumer, they're costing you more money. Now they've gone after the loan officer and the way they're getting paid, and they're going to be making less money. And it's going to be very regulated on how we get paid as of April 1st, 2011. So the whole industry is in dramatic change. I think you're going to see a lot of changes, whether it be at the commercial banks, the Bank of Americas, the Wells Fargos, your local community bank, or the mortgage bankers, the national mortgage bankers that survive this. You're going to see a lot limited product. You're going to see limited choices for certain on what you can do with your rates and what you can do with your closing costs. And long term, I think this is going to be a detriment to the housing market. Okay, with that, I'm done with my rant. People will still continue to get mortgages after April 1st. There'll still be loan officers, a lot less of them, but there'll still be loan officers. So with that, I appreciate the time, and I look forward to speaking to you again.
Forget you, Campanella. You're still the MVP within my heart. You're still the MVP within my heart.